What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button. If you haven't already, hit that subscribe and notification buttons as well. That way you are alerted when we release new videos. We do release bonus content from time to time, so make sure you are notified when that happens. Now the nightly and weekend videos, like tonight's video, focus on triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades as well. So if you want a deeper dive into exactly how we set up our charts, the trading levels, the broadening formations, support resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We got a couple of videos that dive deeper into that for you. And if you are not familiar with the STRAT, make sure you check out the link in the description of this video. There is a link to a free PDF quick reference guide for you. It basically gives you all the basics of the strat, right? So you can understand the numbering strategy, broadening formations, things of that nature. So make sure you check that out in the link. The link is in the description of this video. So I encourage you to watch the full video. We do go over triggers and targets, especially on shorter time frames, but we do analyze all time frames all the way up through the 1 year chart. So we give some pretty good insight. Let's go ahead and take a look at the agenda for today's video. We'll go ahead and recap price action from today, Monday, February 23rd, before we zoom out like we always do and look at the week, month, quarter, and year. Then we will zoom back in to set our 4-hour markers and the triggers and targets for Tuesday, February 24th. And we will do a quick review of the week, month, quarter, and year triggers and targets as well. All right. So starting off with the 5-minute chart, like we always do, this is how we take advantage of the proven and repeatable strategy that we use to basically get early entries into scalps, early in the morning, or early entries into longer day trades, right? The strategy is pretty simple. You look for higher lows at or above opening print to get into calls, or you look for lower highs at or below opening print to get into puts. If you're not familiar with opening print, that's just another word for the opening trade price, right? The first traded price of the day is that opening print to the tape, and that's what we label opening print. So the keys to those calls and puts now are the overnight high, overnight low, previous high day, and previous low day, right? So obviously if you're getting calls with the higher lows at or above opening print, you want to look for the overnight high and previous high day as your targets. Whichever one comes first is the first target, whichever one comes second is the second target. You can obviously get rid of your full position at that point, knowing that that particular move has made its full move. But if we do approach that second target with some momentum and we've got some follow through, then you can fall back on the 4-hour and 1 day triggers and targets that we'll get into here in a minute. But for calls, the previous high day and overnight high are those targets. If you're getting puts with the lower highs but at or below opening print, then you want to look for overnight low and previous low day. All right. Now, there is some nuance that you can bring to the table with this strategy. It comes with the more you play this strategy, the more comfortable you get. But it also happens to deal with, basic levels of inflection, right? So this morning was a good example of that, right? So looking at the chart, we had a 3 on the opening candle, so indecision on a bigger scale. So not an inside bar. Inside bar is indecision on a small scale, but we got this 3, 2 up, right into this 15-minute broadening formation, right? So if we bring in a little bit of Friday, right, there's the 15-minute broadening formation that we had on Friday to close Friday out, and today we opened right in it, went up to it, also overnight high. 138.2 fib extension of last year's price action, all right here, acting as levels of resistance. We've also got this 78.6 fib of the drop from the high in January, right? So a lot of points of resistance here, but also a couple of points of support, right? And that's why you see this ping pong back and forth between this broadening formation, this fib extension here acting as support, and then this broadening formation, these fib extensions, as well as overnight high acting as resistance. We got an equal high, came down and made a lower low. That should have been your first sign that we're probably going to going to test some downside before upside, right? Equal high, lower low. That we are above opening print, but just barely, right? So you've got the equal high, lower low, then you've got a lower high. And once we break below this 2 here, that's essentially a lower low. So now you've got not just a equal high and lower low, you've got a lower high and lower low. That's your entry, right? So we did go ahead and take some puts once price broke below the low of this 2 down. Now we did get some corrective activity around opening print, as would be expected. That was the opening print, so intraday, a point of inflection. And so if you did not take this lower high just slightly above opening print, which brings that nuance into the equation, right? We're usually looking for at opening print or below for that put, but it was just slightly above. There was a lower high here in the 1 minute that you could have got in on, right? And then you get your real push to the downside, right? And where do we go to? Overnight low and previous low a day. We get that bounce off a previous low a day, push up, back above overnight low. We come back and test overnight low, find it as support for a little while, just moving sideways. The fact that we didn't bounce off of it should have been some more, evidence that we weren't, looking for just V-shaped recovery today or something like that. And you see that sideways action moving across here. You do end up getting this lower high, pushing down, making just a slightly lower low, but again, bouncing off previous low day, overnight low. You've got your fib extension here, as well as that range that we've been in since last Thursday, 2 Thursdays ago, the 12th, and then the 61.8 fib of retracement of the drop from the high in January as well. So a lot of support here, and that's, we got to bounce from there. So we did get rid of half of our position when we got to previous low a day. We did get rid of the rest of our position when we bounced off previous low a day again, judging off of the fact that we were finding a little bit of support at overnight high, knowing that if we did bounce off a previous low a day and get back above overnight high, we're probably going to make a push maybe for the rest of the afternoon. Could have been was the thought, just with how V-shaped these bounces are. These pullbacks are really getting bought up. The bears have not been able to really capitalize. If so, we would have made our way back down to the bottom of the range that we've been in for the past few weeks by now. We'll take a look at that here in a second once we zoom out a little bit more. But once we basically double bottomed on this previous low a day, we did get rid of the rest of that position and kind of just watch the rest of the day. We were looking to get involved. Let's zoom out to the, I'm sorry, not the 15, the 1 hour. There we go. We were looking to get involved on this 1 hour if we would have made the lower low on this 3, right? So we had the 3-1 2 down trigger, but you got to be careful of what comes after a 1, because you can always have a 1 2 down 2 up reversal, or a 1 2 up 2 down reversal. We got the 1 2 down 2 up reversal. That's why we were looking for the lower low, based off of this soft lower high that we had right here. But we never got that. It triggered. We played around with the overnight low once again, but did end up finding it essentially as support and going from there. Now, it's interesting that we did bounce right into this daily downtrend line that we've got going here. We'll take a look at that again a little bit further when we zoom out a little bit. But for right now, just this sideways action. And for the past, 4 days, we've been in like a $4 range, right? So last Wednesday, we got up to 68. Thursday, we were down to 63. Then we were back up to 68. Back down to 63. Now we're right in the middle of that range. So price is consolidating even more, it looks like here. Just more sideways action. So continue to keep an eye on that 1 hour. If we can set a trend on the 1 hour, then maybe we can get it going on the 4 hour. Speaking of the 4 hour, if we look at this, we do technically have a soft lower high from today. All right, so here's the 4 hour time chart. Try to make this bigger for those on looking at a phone. There we go. So we had this soft lower high here, right? Here was your high. We came down, soft higher low at first, but we ended up pushing down further. So we've got just this sideways action once again on the 4 hour. We had this lower high, higher low, and then just a slightly lower high here as well. A slightly lower high here as well. So you can see it just all condensing, consolidating. We're right on last week's 50% line at this point, 65.08. So we talked about in the weekend video and basically every week how we react to that 50% line of the previous week is a good indicator as how the rest of the week will go. As of right now, we haven't really resolved it, right? We're just going along it at this point. We're sitting right on it. We closed the day, I think, up 1 cent, barely green. Let's take a look at the day chart. Zoom out a little bit more. There we go. So yeah, it was a 2 down, but it did end up finishing green. Doji, I think by like 1 cent and finished green. So 65.86 was the close. 65. Where's our week opening print? 65.85 was the opening print for the day. So closed green by 1 cent, and you can just see the inside action. So intraday scalpers, you can make some money. But swing traders right now, you're kind of just, if you're a bull, either way, just because of the sideways action, I hope you've got plenty of time on your contracts, right? Right now is not really the time to be trying to swing, 7-day or 14-day contracts. 21 days may even be kind of pushing it a little bit, just because we're still not yet totally back at the top of this range. We're towards the top. I'd like to see maybe 69, closer to 69, to see what the reaction is there. Last week's high, 68.44, would be a good judge of the price action as well. If we get some more corrective activity up here at 68.44, 69 flat, we could be looking at a rejection to go back down towards at least the bottom of this mini range, $63, $64 area, if not the larger range that we've been in, down here to $59, $58. So still just consolidated action. Got to be patient if you're doing anything other than scalping, right? Wish I could tell you different, but that's just how it is. Let's go ahead and zoom out just a little bit further here. Let's take a look at the week chart. Oops. And we can see on the week chart we are inside, coming after another inside week, barely keeping above, going 2 down and locking in this lower high on the week chart. So from a bull's perspective, bullish consolidation is what we're seeing here, just moving sideways. We're staying in that upper half of the 2 up that we had a couple of weeks ago, which is definitely a bullish. But we're starting to see that slowdown again, right? This general $67, $68 area is where we've been kind of peaking out over the past 4 or 5 weeks. Yeah, we've had a couple of wicks through there, but just very briefly. So want to see a resolution of the $68, $69 level. Would be great to see some type of pop up and higher low here on like the day chart or the 4-hour chart to push further, get above that 71.98 level, get us that higher high on the week time frame to lock this higher low in as a true higher low. It's a higher low right now, but if we followed up with a lower high, then it's just part of a possible trend reversal, if not just consolidated action. So yeah, I mean, it's a true higher low, but if we can get that higher high, then that continues the uptrend, right? So from the week perspective, not a whole lot more to say there. Things are still looking pretty good. Nothing's really broke down. If we just look at it in the perspective of the bull flag from the April 7th low, here's the April 7th low here. Here's your flag pole. There's your flag. And then we've got our fib extensions out here. If we activate those again, 200 fib extension is right around that $65 level. And then the 238.2 is up at that $73 level. So that could be the next little range that we end up bouncing through and moving sideways through if we do get that confirmation essentially of this $65 level as support. Then we can kind of push back up and try and, again, like we said, go 2 up on that week. It's going to be really important to get that higher high and continue that trend to the upside. All right, so nothing breaking down from the week. Let's take a look at the month. This is the only other thing that really has something that could bring some interest to the table, more immediately than anything. On like the quarter and year chart, we do have this 1 from December, the 2 up from January, and we're an inside candle for this month, right? So we do want to avoid going 2 down on the month. excuse me, if we go 2 down on the month, that triggers this 1, 2 up, 2 down, magnitude being down here at the $28 level, right? And we've got this gap here as well with some more gaps not too far below that can act as magnets if we do get some type of momentum move that pushes us back down here. So don't want to see that. Currently in an uptrend, right? Higher low in November, made a higher high in January. So we are in an uptrend. You know, a pullback wouldn't be the worst thing in the world, but you know, personally, I'd truly like to avoid going 2 down on the month. I think that brings a lot more bearish price action to the table, or it should, based off of the strat, right? And then if we are down here, you know, below the $44 level, if you know, we're below the week flip, the month flip, the quarter flip, the year flip, right? That we go from being the week, month, quarter, and year all green to week, month, quarter, and year all being red below this level, and then, you know, bears have got a lot more momentum at that point. So we'll see how things turn out. Again, we're a ways from triggering that, so I won't talk too much more about it, but just keep that in mind. That is a possibility that could be on the table here. All right. On the quarter, again, we've talked about this over and over. The strat has been run. We had this 1 combo 2 down, combo 2 up. 70.08 was the magnitude. We obviously reached that, went just a little bit above. So you can see the pullback that we're going through from there, and just trying to maintain that position. 74.21 is the all-time high. So ultimately would like to set a new all-time high, but not surprising to see a bit of a pullback after reaching this strat magnitude on the quarter as well as the year. If we look at the year, we had a 2 down in 2025. In January of this year, we triggered 2 up, giving us a 2 down, 2 up reversal. The magnitude of that move is the high of the candle to the left of the 2 down, which again was at 70.08. So not surprised to see a little bit of that pullback here. Nice to see that we haven't pulled back more. It's bullish consolidation in our opinion, and especially until like the 1, 2 up, 2 down were to trigger on the month. There's nothing really to worry about from here. Yeah, I mean, we're not pushing up like we did from this April 7th bounce or the July bounce. Those were some pretty big pushes, and it can't be expected to just keep doing that over and over, right? So let's take what we've got, and then we'll take the day that volatility that we've got on the day time chart and lower, and just play those intraday, make some money, come out clean at the end of the day, ready for another day until something were to trigger, give us a trigger on a higher time frame to really swing longer, right? So that trigger could be the higher high on the week. So we may not have too long to wait for that, but as of right now, it's just be patient, right? Yeah, let's kind of all we've got from a zoomed out position or zoomed out view. Let's go ahead and zoom back in and take a look at tomorrow and see exactly how we will play things, especially in the morning, early morning. We wanted to use the proven and repeatable strategy that we have, and to do that, there we go. Currently, we've got previous high a day, overnight high. Overnight high will probably move before the open tomorrow. We'll just put it up here towards this fib extension there, and we'll call overnight low. We'll kind of keep it where it's at, the week, last week's 50% level. Right, so just for illustrative purposes, this is what we've got. Overnight high, 64.03, just above that 63 flat. I'm sorry, 64.03, above that $64 flat level of the 50% level of last week. We got previous high a day up here at 67.65, overnight high, and previous low day. So those are our 4-hour markers: previous high a day, overnight low, previous low day. You have to wait until the market opens in order to get our opening print level. So let's say we have a little bit of a pullback in the overnight, and we open here, right? Proven and repeatable strategy is quite simple, right? We look for the higher lows at or above opening print to get into calls. So if we open here and we push up, maybe get a little rejection off of this daily downtrend line that we've got going here, this orange dash line, and we pull back, but we get a higher low at or above this opening print level, we want to look to get into calls, targeting overnight high first and then previous high day, right? Could work out pretty perfectly with this 15-minute broadening formation that's coming up through here diagonally. If it takes its time to get up there during the day and finally reach previous high day, it won't have violated that broadening formation, and everything would be basically forming out perfectly, right? But that's the ideal picture, right? You get some type of open here, push up, pull back, higher low, enter the call, exit part of the position here at overnight high, enter the rest of the position here at previous high day, maybe leave a runner or two, especially based off the price movement to get there. And, you can look for your 4-hour and 1-day targets past that. But for the move based off of the opening print level, it's overnight high and previous high day. Okay, same thing to the downside. If we get some type of lower high at or below opening print, want to get puts targeting overnight low and previous low a day. Okay, let's go ahead and zoom back out to the 4-hour and take a look at things from more of a day trade perspective. And we can see here we were hit with the day of indecision, right? We call threes a big indecision, right? Bulls had their chance, bears had their chance, couldn't do anything. All right, we went above previous candle's price, we went below previous candle's price, and still couldn't decide what to do. We ended up closing slightly below it, but indecision on a large scale, and then indecision on a small scale, right? We tried pushing down to get below the previous candle's low, but couldn't. Tried to push up and get above the previous candle's high, but couldn't. So indecision on the inside. So it does leave us with a possible 3-1-2 down for the first 4 hours on Tuesday, or a 3-1-2 up. All right, those are both entry based off of the edges of the 1, and exit based off the edges of the 3. So obviously less magnitude to the downside than upside, but we're currently more of a downtrend than an uptrend. So you got to keep that in mind. If we do go to the downside and we reach that small amount of magnitude, we are technically still in this 1-2 up combo 2 down. So that magnitude will bring you down here to the low of the candle to the left of the 1. So got a little bit of movement to the downside, but does seem just from a strat perspective, there's more risk to reward to the upside. But it still remains to see what price action will do tomorrow. And you don't want to do it just because risk to reward is better to the upside. You want to just buy calls blindly. You want to wait for those triggers and targets. Get above that high of the second 4-hour candle from Monday. Once you do that, that's triggered, and then your exit is here at the high of the 3. So just keep all that in mind. We're in this tight $4 range for the past 3 or 4 days, so don't expect too much movement. And if we do get outside of that range, you may just want to still be patient and watch to see, do we get a look above and fail, or do we get a look above and then a higher low to signify support as what was resistance now being support. Then you may want to get into the upside. All right. On the 1-day chart, all right, we had a doji 2 down, just barely 2 down, but a doji, right? So indecision, did close 1 cent above the open. So that just spells patience to me, right? The close was just slightly below this daily downtrend line that's going here. A new daily downtrend line was created today with the 2 down here. So even if we do break above this one, we've still got some more resistance that we've got to look at here. It does line up with last week's high. So again, until we get above the edge of this little $4 range that we're in, it may be behoove you to just wait out, right? The best trade can be no trade sometimes. On the day, from the day perspective, not a whole lot to say. Just look for the trigger. There's not a lot of magnitude to the upside or downside, right? If we go 2 up, combo 2 down, meaning we go below today's low, the magnitude of that move is only the 2 down to the left of that 2 up, which 63.47 and 62.96, yeah, like 50 cents right here, right? So not a lot of magnitude. If we do go 2 down, 2 up, meaning we go above yesterday or today's high, then again, 67.65 to 68.22, like 50 cents of movement. So just getting this strat completion doesn't have a lot of magnitude. And you want to just really wait for those edges to be sorted out, right? Get outside the range that we've been in for the past 3 or 4 days, right? So again, patience is the key. I wish I had something better to tell you, but if I just tell you to go, buy calls tomorrow just because Nvidia earnings is coming up or something like that is not responsible of me, right? I there's a strategy that we use that's proven, and there's no reason to break out of it, right? From the week perspective, again, we're inside week towards the upper half of last week, and just really looking to go 2 up to try and make that higher high on the week time frame. But because last week was a 1, we do have to still be aware that even if we go 2 up, we got to watch how the rest of the week finishes, because it just could be just setting up, setting up a 1, 2 up, and then 2 down for next week, which would just bring us right back down here to this $59, $58 level. All right, so bullish consolidation right now. It's really what we've got. Let's go to the notes here. We've been looking at the charts quite a bit. Let's just look at the hard numbers. So for Tuesday, February 24th, there will be 216 trading days left in 2026, and the close price on Monday, February 23rd was 65.86. That means that we are still full time frame continuity to the upside, meaning the week, month, quarter, and year are all green. Of course, the week only has to go down 1 cent to go red. The month has to get down to 59.51 to go red, and the quarter and the year have to get down to that 45.13 to go red. But just keep that in mind. We could enter some chop if the week turns red and we've still got green to the ups on the February. On the month, quarter, and year. We could have some chop until that week is resolved and we get back to the green side, giving us full time frame continuity to the upside. If we don't get back to the green side, then we're looking at that possible 1, 2 up, 2 down situation on the month that would bring us back down to the $45 level, which would flip the quarter and the year red. So just know we do have that domino situation on hand, and just want to monitor that closely. The expected move for the week for the market makers was plus or minus $9.08 from the close on Friday, giving us an expected range of 76.19 and 58 to 58.03. Kind of smack dab in the middle of that right now, so we'll see how that continues to go. No gaps above right now, but we're keeping note of the gaps below. Always got to keep those in mind. And we know from a scalping perspective, we're looking for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. We talked about on the 4-hour time frame, if we go to the downside, first thing that triggers is the 3-1-2 down at 63.83. Not a lot of magnitude there to reach the STRAT, which is 63.47. But once it does reach that, it does then trigger this 1-2 up, 2 combo 2 down, magnitude being 61.43. If we go to the upside in that first 4-hour candle tomorrow, we will have a 3-1-2 up triggering at 65.90. Magnitude only being 67.65, so we do have the extended targets listed out here for you as well. On the day chart, we've got a 2 up, 2 down. If we go, 2 up combo 2 down. If we go to the downside, that would trigger at 63.58, and the magnitude of that move is 62.96. So again, not a lot of magnitude there. So we do have the extended targets out here for you. And then if we do go to the upside, that gives us a 2 down, 2 up, 67.65 is that trigger. But again, 68.22 is the magnitude of that move, so not a lot there. If we do get some momentum going, then we've got the extended targets list out here for you. Specifically that 71.98 last month's high. That would also give us the higher high on the week time frame. Speaking of the week, we're still inside on the week. If we go to the downside, it gives us a 2-1-2 down. We've got to get down to 59.56 to trigger that. Magnitude of that move is 59.29, so not a lot there. But that if we get to that 59.29, that triggers a 2 up. That should be combo 2 down. So 2 up, combo 2 down. Which would take us to 55.49, which would then trigger this 3-2 up, 2 down, which would take us all the way down here to 42.01. So could domino us all the way down here to 42.01. So again, just keep in mind, we don't want to get too far ahead of our skis from a bull perspective. It is bullish consolidation, but it is consolidation. There still is that opportunity for the bottom side to drop out. We've got to get that higher high on the week time frame to continue that uptrend, right? So talking about continuing that uptrend on the week. If we go to the upside on the week, that triggers at 68.22. The 2-1-2 up magnitude is 70.86, so decent magnitude there, a couple bucks. So not bad, but we really want to push higher and get that 71.98, so that we get the higher high. Right, 70.86 gives us the matching 2 up number, but 71.98 gives us that higher high on the week. And that's what we really want to get. If we do get that 71.98 and continue to press up, right, 74.21 obviously is all-time high, and shooting for that. Anything above that is blue sky territories, but we do have those extended targets out here for you. All right. We talked about on the month, we're trying to protect against that 1, 2 up, 2 down. Got to get down to 45.08 for that to trigger. So still a ways away from that. Don't want to speak too much into it because we don't want to bring it to life, right? But we do need to be aware of it. 45.08 triggers the 1, 2 up, 2 down. That takes you all the way down to 28.12. What we are looking for is a continuation, this 2 up continuation. Got to reach 71.98 to do that though. And then again, 74.21 is the all-time high. We've got some blue sky territory targets out there for you as well. We already talked about the 1, 2 up, 1 combo 2 down, combo 2 up triggered on the quarter and has reached its strat. So nothing else to really say from that perspective other than you want to just see continued movement to the upside or at the very least bullish consolidation. And the same goes for the year. The 2 down, 2 up was triggered in January, and it did reach its strat, reach its magnitude, getting up to 70.08. So nothing much else there to see from the year perspective. Just got to really watch the month and below to, let that volatility play out and give us, the triggers that we need for more guidance on those higher time frames, right? So that's what we're looking at. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Hope everybody enjoyed today's video. If you've made it this far, don't forget to give us a thumbs up. It's free, it doesn't cost you anything, and we think it's a pretty good exchange for some free information to possibly help you be a better trader, right? So thumbs up goes a long way, and we really do appreciate those who continue to tune in. We do have a consistent group of folks that show up. Love to see that. It lets us know that we've built, some sense of community around here, and that's what we're looking for, right? No membership fees or anything like that. Just want to find a group of like-minded folks to possibly help out a little bit here, make trading a little bit easier, because trading is not easy, but if you can make it a little bit easier, it's that much better for you. So just want to do that for everybody. Keep those comments coming as well. Love answering any questions. Love getting, new ideas from folks as well. Constructive criticism, all of that stuff. The interaction is fun. So keep those coming. But at this point, we'll go ahead and end the video right here. We'll end it like we always do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Tuesday morning or Tuesday throughout the day, hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.